growth reached 5.2%, while inflation remained low at 1.4%. Domestic demand stayed firm, and exports showed resilience. Credit to the private non-financial sector grew by 5.4%, with SME financing expanding by 5.4%. Of significance, the ringgit steadily strengthened throughout 2024. Continuing from 2024, the ringgit once again performed well last year, appreciating against the US dollar and key trading partners. Global factors such as the dollar performance played a role, as so did our domestic strength. Year to date, this positive trajectory has continued, although the recent developments are causing some. Going forward, the ringgit will remain driven by market conditions and global forces. Towards this end, Negara Malaysia is committed to ensuring and updating. This brings us to the outlook. Malaysia enters 2026 from a position of strength to navigate challenges. Our strength lies in, first, diversified growth drivers with cushions to preserve a single sector strength. Second, the healthy balance sheet positions among households and firms. Third, the strong financial sector that supports the economy to grow. And fourth, sufficient macroeconomic policies, both monetary policy and fiscal policy. And taking into account all these factors, the Malaysian economy is expected to grow at a resilient pace of between 4 and 5% in 2026. Now, let's look at the drivers of growth. Household consumption remains a key anchor of growth. Income prospects are positive with continued income growth. Labour market remains firm, with unemployment expected to remain near its decade low at around 2.9%. Targeted policy support are also in place to help Malaysians improve. Investments, the positive news is investment approvals continue to increase, reaching to 427 billion ringgit last year, while implementation rate for manufacturing projects remain high at around 80%. Geopolicies and incentives, diversified supply chain, and strong infrastructure, as well as skilled workforce, are among the factors that affect business. We see private sector capacity expansion in traction, led by the ICT and BNM industries. We also see progress on the national master plans and major public investments, including renewable energy and transportation projects. The realization of these investments will strengthen the nation's productive capacity for the future. Moving on to trade. While the external conditions are certain and challenging, grain exports growth is expected to be moderate to 2.8%. Despite this, there are three points that's worth noting. One is that we have a diversified export base. No single country accounts for more than 16% of our exports. Across products, Malaysia also exports different goods and services, from commodities to advanced services. Two, rising data center investments, lifting the ICT services exports with wider spillovers across industries. And third, supported by its deep roots and linkages, our BNM sector is well positioned to gain from the global tech investment sector. Not many countries can showcase such diversified excellence. I want to spend a few moments on how well our BNM industry has advanced. If you think of GPUs as the brains of AI, nature supplies the nervous system and other vital organs to the brain. Everything from our chips, which is the heart, optical transceivers, the eye, and the high-speed connectors which is in there. While Malaysia continues to gain a steady foothold in the leading-edge chip fabrication segment, the country is strengthening its capabilities in advanced packaging and front-end activities. And this will keep us competitive beyond the current learning cycle. Also stands out as a source of strength for the economy. Last year, the tourism industry helped turn the 14-year deficit of the country's services account into a surplus. This momentum is expected to continue in conjunction with the visit in Malaysia in 2026, steady visitor arrivals this year, particularly from Asia, will generate positive spillovers across retail, transport, and also hospitality. However, a word of caution, developments in the Middle East could pose downside risks to these projections. Moving on to inflation outlook. In 2026, the headline inflation is projected to be between 1.5 and 2.5%. Given the external developments, the overall cost conditions are uncertain at this point. However, underlying inflation is expected to be broadly stable amid a steady domestic demand and economic. Domestic policy measures will also help limit the pass-through of global cost pressures on domestic prices. Let's move to the risk to growth and inflation. We enter 2026 from a position of strength. But strength does not mean total immunity. There are key risks to the growth outlook that we must continue to monitor, assess, and manage. Downside risks are mainly external in nature, arising from slower global trade due to Middle East conflict and tariffs, alongside the lower commodity output. On the Middle East conflict, the situation is highly fluid. Developments on this front change by the day. The effects to the world and Malaysia will depend on the length and the severity of the conflict. There are, however, some upside potential at risk from better global growth, stronger PME demand, and also more robust growth. As for inflation, upside risks stem mainly from external factors, driven by geopolitical uncertainties. Let me now move to monetary policy. First, our economy can face the headwinds unavoidable, but monetary policy will continue to play its part to safeguard its business. Last July, we lowered the OPR by 5 basis points, and this was to preemptively ensure support is in place should pressure. As we move into 2026, our focus remains urgent. This is to maintain price stability while fostering conditions that support us. FTC will stay vigilant to manage risk, with decisions guided by assessments of risk in Malaysia's economy. I share a lens on growth prospects. It is resilient in broad-based. Crucially, the financial system is also in a good position to support this growth momentum forward. What do I mean by this? First, we have a financial system that can withstand shock, ensuring financial intermediation continues even under stress. And second, our financial sector is stepping up to meet the needs and challenges of the modern economy. Let me elaborate on this. First, banks and insurers continue to operate with strong capital positions and ample liquidity, providing a stable foundation for the economy. Every year, we put them through stress tests to gauge their resilience. And this year's results show that even under stress scenarios that are more severe than what we saw during the global financial crisis and the 2020 annual distributions, Banks' aggregate capital ratio remains well above the regulatory. What does this mean? This means banks have the buffers to absorb losses, and even in challenging conditions, they can continue lending and supporting financial education. Similarly, insurance also demonstrates the ability to withstand shocks while providing protection to households and businesses. Now, turning to borrowers. The overall repayment capacity of businesses and households is sound, with a share of risky and impaired loans remaining. The majority of businesses are able to meet their debt obligation, while pockets of stress among a small segment of the MSMEs remain still continued. Households too have healthy and stable debt servicing ratio, with limited signs of broad-based stress. Resilience also means that it continues to flow our way up. Even amid uncertainty in the recent period, access to new financing remains intact for both households and businesses. Banks continue to extend value, mainly for working capital investment, supported by strong balance sheet and prudent lending standards. This reflects the financial system's key role in supporting adjustments and growth rather than amplifying stress. Yet, resilience alone is not enough. And this brings me to the second point. We have a financial sector that's stepping up to confront today's challenges and future-proofing Malaysia's economy as we move forward. And to this end, there are four areas that we put in our way for. First, risk protection reforms to tackle structural challenges in the insurance and accountable industry. Second, advancing value-based finance to drive sustainable and inclusive growth. Third, further modernizing our payment systems for people to use safely and affordably. And fourth, strengthening fraud prevention and safeguards against illicit activities. In June last year, along with the Ministry of Health and the Ministry of Finance, the Reset Initiative was launched as a long-term response to address the underlying drivers of our efforts. In 2006, focus will be on implementation, which includes rolling out the pilot for the base emission plan, transitioning diagnosis-related group or DRG-based payments, strengthening private healthcare regulation, standardizing hospital billing practices as part of our transparency process, and accelerating interoperable digital medical records. As for motor insurance, with foundations in place through the e-police reporting and the digital roadside assistance, the priority now is execution. Translating this initiative to real-world adoption and better consumer outcomes through stronger accountability and collaboration across the ecosystem. Word on value-based finance. Value-based finance aligns financial services with societal outcomes, promoting sustainable and ethical financing beyond profit maximization. The focus on this fund is clear. That is harnessing today's finance to ensure tomorrow's growth is sustainable and inclusive. Of note, Islamic finance has pioneered the value-based intermediation or VPR initiatives since 2007, supporting MSMEs, the green economy, and the underserved communities. Looking ahead, we are working hard to expand value-based finance to the entire financial system by empowering businesses to innovative value-based solutions, scaling sustainable and social finance, supporting an inclusive transition to greener practices, as well as building resilience against climate-related events. Inclusion today is not just about access. It is also about safety and affordability. Malaysia's digital payments ecosystem has expanded tremendously, allowing consumers today to transact through various forms of digital payments. For businesses, especially small ones, this means easier access to digital payments as they have broader customer reach and more convenient cash management. Advances in e-payment adoption now places Malaysia second globally. To future-proof this progress, we will continue to modernize the payment infrastructure, including testing real-world use cases for tokenized deposits and stablecoins through our digital asset innovation. As payments digitalize, what risks also involved. Preventive measures such as the deployment of more advanced fraud detection and strengthening the malware defenses are showing results, with 1.2 billion ringgit in fraud losses was collected in the plan. This is 4 times higher than the actual loss reported in Negara Malaysia. The National Scam Response Center, the SRC, now under the BNM and also the SUNC, enables faster response at scale. And Malaysia's upgrade to the highest tier in the back-end mutual evaluation also reinforces international confidence in our financial system as safe, reliable, and fast. We think the rate of the report is very comprehensive evaluation. In summary, Malaysia has a financial system that is not just able to withstand shocks, but it also enables growth, protects trust, and evolves with the needs of growth and the economy. With the current financial sector blueprint coming to an end, we are now working on the next step to set priorities for a more dynamic and competitive financial system. Our early thinking is moving in 3 broad directions. First, how finance can do more to catalyze resilient and dynamic growth. Second, how do we build stronger foundations for the coming year? And third, how can we provide clearer policy direction in the areas that matter most, such as innovation? In the coming months, we will be engaging a wide range of stakeholders from the financial sector players to everyday rakyat for insights that can sharpen the strategies. Before I stop, I would like to touch on my favorite topic, structural reform priorities, which are critical to Malaysia. Over the years, Negara has been a strong advocate of structural reforms. Much of today's economic strength are the results of reforms. Some recent measures, such as the fiscal governance, investment policies, energy tariffs realignments, and Budinan Fund, addresses long-standing distortions and strengthen our long-term growth foundations. With this groundwork in place, Malaysia's path forward should rest on several key priorities. First, building external resiliency, given the more fragmented and tech-driven world. We must continue to invest in AI and tech-ready infrastructure, gearing up for future global challenges. Second, labor market reforms, strengthening talent retention and raising incomes, thus addressing cost of living measures. Third, advancing social protection to lead our people to upward mobility pathways and more targeted and integrated assistance. This is an important area to enhance our socio-economic fabrics, to create a more resilient and equitable environment, and improve the overall well-being of everyone. Fourth, mobilizing financing for the new growth sectors. Ensuring efficient financing flows to priority sectors is crucial to support innovation and drive Malaysia's next phase of growth. Negara Malaysia has recently established the financial sector engagements platform, we call it the FSE platforms, to develop practical financing solutions for key economic sectors. And this will support more calculated financing, which will enable banks to play a stronger role on this front. We articulate our findings, analysis, and policy thinking publicly across the three actions that we are publishing today. We feature several box articles that address key issues ranging from everyday education experience and trade turbulence to topics on inclusion and trust finance. I invite you to explore all these articles. Now, let me summarize why. Global uncertainty will shape everything, and that is certain. However, by sustaining domestic demand, steadily executing investments and reforms, and ensuring that resilient, inclusive financial system, Malaysia is well positioned to meet this challenge with confidence. Finally, I would like to take this opportunity to express my heartfelt appreciation to the board of directors and our partners from government agencies and industry players in the country to international counterparts, whose shared purpose and collaboration have been instrumental in advancing our goals. And to all my bank Malaysia colleagues, terima kasih for all your professionalism, dedication, and the quiet commitment to public service. Your work, often unseen, makes a real difference to the households, businesses, and communities across the country. The challenges ahead will require continued cooperation, trust, and resolve. By working together, we can ensure that the financial system remains a strong enabler of economic progress and social well-being. And we owe this collective effort to the 34 million nations we serve today and beyond. With that, my team and I will now be pleased to take on the questions. Thank you very much.
Thank you, Daniel. At this juncture, we would like to call for questions from the media. We will take your questions in three segments. The first on economic topics, the second on financial sector topics, and the last on other topics. If you have any questions, please feel free to raise your hand. Our colleagues stand ready to pass you a mic. Please state your name and publication before sharing your question. Now, I would like to invite questions from the floor on the first segment, economy. We will take a few questions at one go. I see the hand from Afrina TV3.
Hi, Governor. Afrina from TV3. So previously, the government mentioned that we project this year's GDP to grow between 4 to 4.5%. So what makes BNM optimistic to put such target from 4 to 5% given the continued uncertainties? For example, yesterday we saw another strait above L Monday has been threatened to close, which will escalate the oil prices further. So our fundamentals really that strong. Thank you.
Can I have another question? India from PH. The gentleman in front.
Good morning, Industry. Following up to the Emir, I know from the Edge. Emir. Following up to the previous question, I know what's your worst case scenario if the war drags on beyond 6 months, and how far into the future is BNM doing your stress test?
Can I have another question? Melissa from CNA.
You spoke about reform and moving right side. I wonder what you think of the runaway subsidy bills now. Is it sustainable? How is it stressed about this situation?
Governor, perhaps we can take the first few questions. So if we do things, whether there are activity on board for cars, worst case scenario, and the other one on form and within the design.
Thank you, and please attend to all the questions. I think I'll just do the growth questions first, and then in terms of the scenarios we're looking at, also in terms of the subsequent fields that are simple. Okay, on the growth, when the government came up with the projection of 4%, that was last year. That was before our third quarter of the growth. So the quarter and quarter performance was very good. As we look in group activities, given support, especially coming from here, immigrants and others. So that has been taken into account in terms of projection policies. And the 2 points that we once in terms of this year, the growth will be sustained in hospitality. We see the outstanding is resilient, given the positive level of conditions, and we continue. For example, in government at the lowest 2.1%, and we just is increasing. Second is that we do see robust momentum in investment. As in last year, strong growth investments. We have multi-year project investments coming through, and then we are at various stage of implementation, and this will continue. And in addition to that, there are also new investments coming for FDI and BNM to support all of the bands that we have. For example, NPR, NIM, NSS, and to the 15 years. So the other projects we do. And these projects are for infrastructure, roads, hospitals, schools, and education. So these are the second point that is supported to see in terms of investment organization is so very high. They are 85%. So the other category, there's a repair, buildings are rebuilt, machineries are installed, these kind. Third is that tourism as a source of earnings. And while they acknowledge there could be some adjustments based on what's happening in the Middle East, but we still believe that the tourism will continue to support. And fourth, export. Export has grown last year. And this year, while again the tariff has been grown, but we have to understand that we have a very bad supply. That's what us. Also in terms of the second is that we see a strong demand on the and this will continue, especially with the continued growth in AI developments globally. In fact, apart from the macro economy, we also do engagement, underground engagement with companies, factories, and assist. And so far, the other books for the BNM is supporting the AI developments and utilization. For the next 6 months, the other book is and this is as the fascination. Second is that the investment intention of this is what we need. Compared to last year, when we did the engagement, there was some access that they might look and see for a lot because that's a big value. But this year, given the strong demand in Kijang, the investment intentions continues. So that's it. So these are all the factors that is important. And don't forget, just now, we have a strong banking system. We will continue to be able to cover communication with the economy. So these are the points. The present on the scenario, of course, given the developments, we have to think about some of the possibilities of scenarios. Of course, we look in terms of the self-destruction, in terms of how long this conflict will last. In fact, our baseline talks about months. Our likely scenario would be 3 to 7 months. Of course, we can play the scenario of more as one kind of second, in terms of what will be the severity of this, in terms of damage to infrastructure. This is something that is still available. Because you know, the fog of war, things are certain, because not clear, damages are being announced, but again, after the things settle, then you know what actually happens. So this is where I think digital and continue on with how to get impact into our process, so it moves on. And using in terms of a scenario, I'm sure this line is 17 for information, year to date 77. And so this is the average of it. Now this scenario is between 90 to 100. That's all. Of course, the unlikely scenario, which is a clear risk, is between 110 to 100. Again, our growth prospect that we share this with 5% has to go into account the baseline and incorporated part of the scenario that we have discussed. Just taken into account some things. But this will get worse under the clear risk scenario. Of the assessment was always do a revision. We did the same thing last year. Even the certainty. Because I think in group of state, we need to be able to really see through in terms of analysis and so what the real and the higher changes. So this was to give us to see what's happening and move it out. That's in terms of the scenario. And basically, I would say that even the national scenario and the baseline of only disabled. Melissa, in terms of the reform subsidy, the reform rationalization that created is called actually that is created in terms of the electricity, water, diesel, that is created. And we're glad that we're able to implement the reform in the good way. And of course, this is a space of how us to manage. We always say that before it's important for us to create purpose for us, so that we can use this purpose to really create. So we have to in terms of supply, we have something. And yeah, so we explain that while we do have supply now, we are also continuing to effort to identify new sources, new alternatives that we can also source. That also mentioned. Second is that in terms of the facility of this work, that's where I think the space created is very important. And now we look in terms of how the reform measure was designed. We found us in with a few, I would say, levers for to manage. First is that one. And the forecast, not one. The government has recently used it. These are the ways that we can use and situation.
Thank you, Dominic. May I invite another round of questions? Yeah, the gentleman here.
Good morning, everyone. Yusoff with Sasana. Just a quick question. Along the subsidies, the government, when Prime Minister announced the hike in the subsidy bill, it's like more than fourfold increase because of the Iran war. Going up on the sustainability issue, is it going to be, could be potentially lead into Malaysia's deficit this year? And also on
Okay, can I have another question on the floor? Nabila?
There have been calls from industry groups, including Sasana and BNM, for the government to introduce a stimulus package due to the geopolitical crisis. So how does BNM assess the necessity of such a measure at this conjunction, and if no stimulus package from the government, are Malaysian banks currently in position to extend further support to businesses without the needs for additional government stimulus? Thanks.
Yeah,
Okay, sure.
I'll do the questions on the subsidy in relation to what is at asked earlier as well. Thanks for the question. In terms of the stimulus package. On the first subsidy, as I said just now, the reform measures that we took provide some space for this, right? And the government has also shown in terms of fiscal management, in terms of meeting our fiscal. And that's where we have the fiscal adjustment. We have now it's very clearly articulated, and we have here for this year the fiscal deficit of 3.5%. And we're seeing the track record in terms of minimum to the state of things. And it's our scenario, and to the fiscal state. We look at the economy. There's a cost. So that's what I think we see in terms of the evolution of this and what is the impact of what impact. That's where all the actions are now. I want to share is that the government is on two very important committees. First is the Committee on Energy Security that's chaired by the BNM and last few days can be rejected. And we have all the agencies from KBN, we got Article Ministry, we got Antara, we got Petronas, we got Nabila, and all the relevant agencies. And we discuss and we look in terms of first, how do we address the securing supply to ensure that we are able to get supply and able to deliver. That's one thing. Second is then, what do we do in the medium term? Because of making sure that we look at what are the options available for us to source. And all this is goes into the M10. And M10 meeting now is every week. That's where I think at M10 meeting, we do all the assessment in terms of what's happening on the ground, what is our supply level, what are the potential sources that we have, what are the options available to us, and what are the measures that we need to do. These are the risks. So these are the actively looking into. And of course, that's where the government has the announcement because of we may not be in the worst of situations compared to some other jurisdictions or maybe utilities, but actions that we could do now is to be more prudent in our utilization and usage, and so that we prepare ourselves if things will be as possible. So, in summary, I would say that the government's minimum going back to the stimulus package. Again, as I said, we are coming into this year from a history of strength. So we have to assess in terms of the impact as things evolve. In the stimulus package, we must know and acknowledge that we have come out from a few crises, especially the recent ones in pandemic. Post-pandemic, they put in a lot of help in this. And all those helps that we put in, from government's fiscal support, from the banks, all the assistance, they all serve on the targeted approach. So these continues, and banks are ready to help borrowers, corporates, SMEs who face any kind of issues, approach the banks. Then they can become social. Second is that through the weekly meeting at the community and M10, the government hears views and perspective from the various segments and sectors of the economy. So one by one. So we get. Let's take a holistic perspective and picture of what's happening to the economy. What are the segments that are most severely affected? How we provide targeted help to these segments. So it cannot be on a silo and sectoral basis. It has to be a holistic looking at the overall picture like the economy, then we can zoom in. Where do we need to put our limited resources? Yes.
Can I invite another round of questions on economic topic? Gentlemen.
Hi, good morning, Governor. So Lawyer from Business Trade. I've got two questions. One is just touching on the fuel subsidy again. With the cap announced by the government in terms of the limit, do you see the cost pass through by the supply chain affecting or seeping into the CPI and the PPI, hence raising inflation? So that's one question. The other question is, what are the scenarios that you see that you need to see before you actually adjust the BNM OPR rates?
Okay, the second question, please.
What would the scenario need to be before you see adjustments needed for the OPR rates?
I have another question. Please.
Hi, Governor Daniel from Reuters. Yeah, so I just like to confirm your comment earlier, if I caught it correctly, whether BNM will be open to revising the growth forecast again, depending on how the Middle East conflict plays out. And secondly, your comment on Malaysia looking at various sources for energy. So could you say or indicate which sources, so like which countries and what type of energy, coal or renewable? Thank you.
Two questions first. I think I'll answer your question first in terms of Malaysian growth. As I did last year. If things stay within the scenario and baseline that we work on, so we'll stay. But this goes otherwise, as I say, still is. So this really goes back because of prolonged conflict, it becomes regional escalation and it becomes massive destruction in infrastructure. So that's when I think over. So that's when I think of course we will look at this and then it is made for somebody else. But this is within the parameters that we discussed just now. We will keep it there and we'll see how it goes. And in terms of the various sources, I think it's a help to share things, but suffice to say that at the European level and at the level, various options are being explored. And from in terms of various areas, and also various types of energy. So it's very important. Okay, that's the question. Okay, now on inflation and also NEC. I'll touch something on inflation and then on NEC, and I also get my colleague Sham to come in a bit more in terms of cost pass-through, especially from the inflation perspective. Okay, when we say inflation is projected to be between 1.5 and 2.5% this year. Why? Is because we assess that external cost pressure to be minimal. Cost is still subject to the global developments, and the underlying inflation is also expected to be minimal. And this reflects the steady domestic demand and the moderate domestic cost pressure. And more broadly, because we have the domestic policy measures like Halimy, that will also help limit the pass-through of global cost shocks to domestic prices. And third is that at the same time, risk to inflation outlook, of course, will continue to be influenced by the global commodity prices and related cost factors, including energy and food-related inputs, which again, I think this remains uncertain. And that's it. The cost pass-through is likely to be gradual and also uneven. Firms may adjust prices gradually, or some of them may depend on costs, given the demand and pressure. pressure, so it depends on how much the producer will then transfer the cost to the consumer. And the impact will also be likely more sectors. With pressure more pronounced in the fuel and transport intensive sectors rather than broad-based across the sector. And on this, for example, like even the design of our subsidy organization, like after diesel, for example. So we try to exclude, continue to provide subsidy to certain sectors, those as more transportation and business, so that the pass-through in terms of cost increases will not be as bad. So these are things that's already in place how to manage in terms of cost pass-through. I will invite Isham to touch on the education and quality, and then we go to the essence of the policy. So to just, I'm sure that many other questions here as well, but I thought it's good to just share some perspective on our thinking on this. I mean, let us start with monetary policy and this kind of scenario. This is supply shock scenario. I mean, the conventional wisdom normally apply a look-through approach. Therefore, NPC is nothing on the precepts, right? And NPC also, we do not respond mechanically, and we normally consider the impact of education and growth in a holistic way. While supply shock could have increased for prices and could have an impact on the domestic price of nations, we also need to see what's the second round impact of the prices and also on cost. Depending on the policy transfer cost to the consumer, and also I think we have to be mindful and look at demand conditions. When prices go higher, of course that will make adjustments to demand as well. It's not a straightforward case. And that's why we need to have sufficient level of information about the size and severity of the shock. And therefore, we will have to look how broad is price increases. For example, we look in terms of the pervasiveness. We look at the persistence of the price increases and how this goes ahead on wages and also demand, right? So we need to see all these dynamics at play. There's a lot of dynamics at play, and to help us to assess the balance of risk to both growth and inflation. And in this regard, we have to meet the tone. Most clearly our mandate of price stability is conducive to sustainable economic growth. And again, so this way we continue to be vigilant and look out for dynamic both at the macro level. And as you know, we do a lot of micro surveillance on the ground. So we look at all of this data point, see what's the appropriate actions, appropriate monetary policy stance. Let me see if I can start to come in a bit more on the
thank you, Governor. I think when we look at the context of costs and prices, it's always good to take a step back and remember our starting point. First is that currently our producer price index is very low. It's been registering a negative growth in the past few months. Second, our inflation rate is also relatively very low at about 9.4%. That's first one. Second is that, of course, as Governor mentioned, the higher energy prices will translate into higher transportation costs and other costs. And the first impact will be on the producer price index. What we have seen in the past is that the transmission from producer price index into the CPI is gradual, uneven, like Governor mentioned. It's also tend to be rather limited. And this limited pass-through is also attributable to partly two factors. The first is that the policy measures that the government has in place, including, again, as mentioned, in particular the subsidy on diesel, targeted subsidy on diesel that will limit the impact on logistics and transportation. And the second is also in terms of the active monitoring and enforcement done by the APD and AP,
to ensure that there is no excessive and opportunistic price increases. So these have contributed to the past experience that show a rather limited gradual pass-through from higher cost to airtime inflation. Thank you.
Perhaps we can move on to the next segment on the financial sector topic. We are called the leading firm.
Very good morning, Governor. This is Dania from New Straits Time. So I have a question on the dividend payout for the government. So with the profits and assets declining in 2025, how will Bank Negara Malaysia balance paying out your dividends to the government and maintaining the adequate reserves?
Maybe that shows the slide that we have on the Negara Malaysia's finances. Okay, I think as you know, last year we made a net profit of around 0.5 billion, and we declared the dividend to come at 5 billion. And we have a policy in place in terms of how do we actually transfer the dividend. And from our profit, the internal policy, where a certain percentage of the profit will go to our general reserve, and the balance will go to the family. So right now it's about 60. That's it.
May other questions on the financial sector topic from the English?
Hi, Governor. Jocelyn from the Edge. So I actually wanted to ask about the current state of the ringgit. And so will there be, currently the ringgit was strengthening, and of course that was taken into account with the current forecast, but there's a slight shift of the USD strengthening because some markets are saying that some countries are kind of purchasing gold. So what could be like driving the slight shift at the moment? And also I wanted to ask in terms of the different scenarios actually, because the Ukraine and Russia war started in 2022 and it's been about 3 to 4 years. So how does that differentiate? What's the difference between then and now in terms of like Malaysia's position as being an energy exporter and also an importer? And because with that war, it resulted in sanctions and rerouting. So in the event, what's the difference between the two?
Clarify, your question was in terms of ringgit, more factors driving performance. And second, the difference between what we're seeing in the Ukraine war and also this conflict.
Can we invite another question, perhaps?
Hi, I'm Laila from RTM. My question is the financing to SMEs grew, but are there still gaps in the access to the credit, especially the small businesses with these uncertainties? Thank you.
Okay, I will answer the first question on the ringgit, the diverse performance, and also just click on Ukraine, because not much I can share as well, because I think every conflict, every crisis, every challenge, and of course I think that Ukraine was rather early, you see in terms of all crisis as well, but this Middle East conflict is and we do not know how this will happen. But this could even escalate to become a regional conflict, because the implications in the greater will be more serious direction. I think I will not say much on that. But under ringgit, I think, of course, ringgit movements will reflect your movements. Because we have the US dollar position, so between the US dollar or of course, I think we have domestic factors as well. I think we get adjustment coming to this as well. And with the adjustment coming also. And ringgit, as you know, will continue to be market that and the outlook for ringgit remains positive. What has been what's likely in terms of the position Second, in terms of the domestic factors, which is in terms of fundamentals that we have. So that's where and we have strong economic prospects. So those are the factors that's important. And we will continue to this. And third, in terms of the reform measures, the commitment to reform measures that will also lead into more and more support. And then fourth, we have that's something that we have also in terms of resilient external sector and investor. So those are the factors as well. In addition to that, from time to time, we also do a lot of engagements with the investors, engagements with the exporters, importers, corporates, to encourage them also repatriate their deposits, their investment income, nation and public. And to address some kind of questions that they have faced in the past in terms of once the corporate intermediate were to go out again, have to come back for approval, we launched the QRI program. This is the kind of program that encourages them. So because they know that we give them a green link when they want to go out again. So this kind of factor that we continue. Of course, I think the current this conflict will definitely have some movements in the ringgit, but these are cyclical, these are sentiments, but more importantly is the underlying strength. So over time, the investors will be themselves see through all this and underlying. And we have seen how inflows of purpose into the economy, into the financial market. We see a lot of stable investments coming in. In fact, we also see new things coming to the country. Thanks to the engagements that we have done when we meet investors overseas, and there's an interest for many of them, and we see them coming to Malaysia's financial markets. So that's how to support it, and that will continue supporting it as we go. And let me just say a bit on the financing. Yes, financing so far is good. Including for the SMEs. That she asked us to also a bit more on this financing for SMEs and what we are doing. We are doing this, meeting them. And the network that I mentioned just now, the Kijang is carrying that network. And if there's any issue, please come forward to us and we'll see about it. Let me know that Kijang will see a bit more on it and not on sometimes.
Yeah, if anything, I can add just to emphasize what Governor has been saying. I think the trajectory for the ringgit is to be remain resilient. The fundamentals are quite strong. Okay, we have built over the past 2 to 3 years. This has strengthened further, and I think we can see that in the robustness of the FX markets. Volume remains at very high levels. That shows that the foreign exchange market is highly liquid, and businesses and corporates are able to transact with no issues with respect to liquidity. And I think if we also are very committed to continuing the engagements and the initiatives that we've done over the past 1 to 2 years, repatriating income and corporates convert, encouraging more use of ringgit and even as an operating currency for many of the MNCs, and continue to engage with various corporates. I'll just add a little bit on the financial sector engagement government. I think this is a more recent initiative that we've started. It has risen out of our observations together with the industry that there could be various knowledge gaps that we can see between the finance sector and the industry. So this engagement is to bring together both industries such as shipping, aviation, TNT sector, together with the banking and also the insurance industry for that matter, to see where these knowledge gaps so that can be reduced, so that intermediation and financing for these sectors can, I suppose, be further enhanced, further that the financial sector is able to very effectively engage with industries across the economy. so we just started that. We just had our first series of engagements, formal engagements this year, which should continue for this time.
Anything you want to share in terms of your engagement in the financial markets?
Yes. So we also, the Financial Market Committee has been around for close to 10 years already. And through the Financial Market Committee, which is represented by a number of the financial institutions as well as from corporate sector, from corporate treasurers, we share observations on and perspectives on how the financial markets are responding to current events. And in our last more recent meeting maybe about 2 weeks ago, most of it, what we see is that Malaysia is certain the observations from market data is that Malaysia is kind of like viewed quite positively with respect to where we have come the past 2 years, but also with respect to how we're performing against vis-a-vis many of our partners. So the sentiment on Malaysia is actually quite positive compared to other to perhaps some of our peers, and this helps bring it to show a strong performance as well as we see various flows into our markets. And I think for the most part, most of the financial market observation is that we have been able to withstand the pressures thus far. And notwithstanding the how ringgit has traded or the technical correction that we've seen the last 1 or 2 weeks, ringgit continues to be quite resilient, and the outlook does remain fairly resilient for the ringgit performance.
Good job, man.
And regarding the loan growth in SME sectors in robust national about 5.9% last year, that's like 4.5 SME loan application to improve. We expect the loan growth to continue to be resilient, as government mentioned that we are entering this period of uncertainty from a position of strength, and that applies to the financial sectors now. Strong capital and liquidity buffers. Our own stress tests indicate that they are able to withstand this even more severe than the Asian financial crisis and the COVID environment. So the SFS is able to continue lending, but to cater for this period of uncertainty, we also have products, for example, credit guarantees from CGC that actually can be issued now. In terms of assistance, they remain available and more than capable of providing restructuring and rescheduling of current loans. On top of that, ATPT also provides similar services to assist customers should utilize. Thanks, sir.
I'm mindful of time. Nabila, if okay, can we close the Q&A session? Thank you very much. Ladies and gentlemen, for all your questions, we have come to the end of the press conference today. Nabila, may I invite you to give your closing remarks?
Thank you so much, everyone, for all your questions and for being here today. And our actual publications are available now on our website. We hope you have a good read and find the insights that we hope for your media coverage later. And we appreciate your partnership in ensuring these messages reach to a broad audience. At this juncture, I want to express my sincere thanks again to all my BNM staff. We here today and also over there, and they all as well. Proud of them to all your hard work into education. Thanks so much for that. I'm truly grateful that I have a team that understands the importance of what we do and the need to communicate clearly and effectively to the public. With that, everyone, have a great week ahead, and terima kasih and selamat menyambut Hari Raya. It's still 1 month, right?
Thank you, Governor.
Official first, official first. Alright, governor sini governor. 1, 2, 3. 1, 2, 3. One last. 1, 2, 3. Thank you. Bernama saya, bernama. Bernama saya. Bernama. Sorry ya.
Thank you, photo. Thank you, photo. Photo. Okay, you guys okay? Okay, thank you. Thank you.
Ladies and gentlemen, for more information on our flagship applications, please visit bnm.gov.my/AR203.